Join just now. Let's take our conversation forward. Pankaj bhai, good morning. Thank you for joining us. You're the only one who's smiling in this market.
Finally, Nikunj bhai, you, me, everybody has seen market cycles, and we know that these are part and parcel of cycles which we have to live with. So always smile, whether it's a bull market or a bear market or a consolidating market, and that's how the life is all about.
Market we are in for next 12 months. Bull market, bear market, or a market which will remain sideways?
I think market can remain sideways for a prolonged period of time. And if you remember, Nikunj, we have been talking about the earnings slowdown, which probably was looking on the face. Second quarter was definitely not good on earnings. And just let's, for 2 minutes, decode the earnings. I think it's very important for all your viewers. When you look at the top 500 companies of India, the headline growth was just 2% this time. And we further bifurcate it into two parts, BFSI and non-BFSI. In the top 500 companies, there are 91 companies which are banking and financial services company, which grew their earnings by 16%. But the non-banking and financial companies, which are 409 in number, actually degrew their earnings by 5%. So our sense is that the second half expectation and the FY26 expectation is still on the higher side. And if you look at in the past, never the upgrade or the downgrade cycle stops in one quarter. What we call as momentum and fundamentals continue for some more time. And I believe that the FY26 numbers further needs to be trimmed as you move into the third and the fourth quarter. And the breadth of the narrow rally will become narrower and narrower. The easy money, which we all saw for the last couple of years, is behind us. And I think now the differentiation of luck versus skill will start happening as you move ahead into the next 12 to 18 months. So prepare yourself for a little bit of a tougher time. I think it will be more of 2015 to 18-19 repeat, where not everything will move up and very selective stock sectors will start showing an uptrend.
Well, we're just hoping right now, Pankaj, that it doesn't get followed by a 2020 COVID-like situation where we're okay dealing with the 2013 to 17-18 kind of patch. But tell me, where is it that you feel further downgrades are in the pipeline and we're not quite bottomed out in terms of the earnings pain in the second quarter?
So we believe that on the industrial side, the valuations are still on the higher side. Order inflow growth has been a little slower, and margins are at cyclically higher levels. The disappointment on margins could be a possibility as you move ahead into the next few quarters. So that's one space you should watch out for. Already the stocks have corrected by 30-35%, but earnings downgrade may follow probably once you start see some margin contraction starting to happen in few companies in that sector. So that's one space. The other space is on the FMCG side. Though we are positive on consumer discretionary, but on the FMCG side, I think the estimates on the street is still on the higher side, so one needs to be a little careful on that. On IT, again, I think the stocks have done extremely well. Index is the best performing index in this correction as well. And the estimates for FY26 is still very high. Anything from Trump on visa issues or anything to do with immigration issues may not be taken well by this sector. So I think volatility could be there as you move ahead into IT sector as well.
It's interesting because we've been speaking with a lot of market experts and it seems like the flavor is returning back to these pharma plays and the entire healthcare sector as well. But then there's always that conundrum when it comes to the expensive valuations that some of them command. What's your outlook on how investors should play the healthcare space?
So we believe that healthcare is one space which has shown consistency in earnings over the last 8 quarters. Whether it be US generic pharma companies, Indian domestic facing pharma companies or hospitals. I think the consistency is clearly there in earnings. And even in this quarter, many companies have reported in line earnings as per the street expectation. Going forward also, I think one mega trend which is making is the CDMO place. I think the US Biosecure Act, if you go into deep, I think it's a great opportunity for Indian CDMO players. And when we speak to many of them, the sense we are getting is that already inquiries have started. And if Trump is very serious about China plus one, I think CDMO could be a mega trend in making as you move ahead, because apart from China, the only country which possesses chemistry skills in such large abundance is India. So you cannot ignore that. Also, the Indian market seems to be doing reasonably well. We believe that this Indian pharma companies have characteristics of all FMCG companies, with in terms of gross margins, return ratios. And if the volume growth continues between 8 to 10%, some players doing better than that, I think it's a great proxy for FMCG in your portfolio. Rather than owning FMCG, you can own domestic facing pharma companies. And third is the US generics, where we have seen for the last 18 months changes happening where price erosion has got arrested. And incrementally, companies have started making money as the markets have consolidated. So I think healthcare overall seems to be in a good spot. We have a decent weightage in our fund also on the pharma side and healthcare side. And that, from an earnings visibility perspective in this market, looks to be a good spot, and valuations are not overly expensive out there.
There are a lot of these themes which are getting created. You see pollution in Delhi, you say, okay, let's focus on energy transition. You see problems in terms of summer temperature going higher, you say you focus on solar transmission. Where are you in terms of this entire energy transmission theme, and especially solar, because that's the most talked about word right now?
So, Nikunj, I don't know whether you had a chance to look at one of our presentations. We put it out a couple of months back, that there are four themes on this entire energy transition. One is the climate change, which is leading to extra consumption of electricity. The second is the AI and the data centers. And third is the entire transmission and distribution underinvestment which has happened. And over a period of time, if you look at these themes, many companies are rightly positioned to navigate these themes. Just let's pick up the first point on the climate change. You will be surprised to know that 8 out of the top 10 countries in the world where AC installations have been the highest in the last 3 years are in Europe. And who would have imagined the countries in Europe where you never required ACs that you need now, because the summers are quite extreme. And that's the reason that the cooling space all over the world has been regarded as one of the less disruptive space and a structurally better growth area.
Have we lost him there?
Yeah.
Oops, freeze frame. A lot needs to change in terms of the telecom transmission as well, which actually has changed after the advent of Jio, but yeah, things are bad here. Markets are looking okay, and there is very little selling which has emerged so far. Markets certainly would take confidence from the fact that the intensity of FI selling seems to be reducing, and globally things are peaking in terms of the pause what they have in terms of how the dollar interplay and the long-term trade has moved, and this entire long-lived China trade now seems to be reversing. So if we get a couple of good days, the oversold conditions in the market actually will start getting normalized. There's NTPC Green IPO which will go public and which is opening today, and because of that the sum of part number of NTPC suddenly will start looking up. Okay, Pankaj bhai, we lost you there when you said that if you're going to Europe you will not get a good holiday experience because you'll have to use a AC. So फिर जाने की जरूरत ही नहीं. Bombay में भी AC, Europe में भी AC.
No, I'm just trying to say that
only get selfies and come back, right?
But
Don't go for the climate.
But a lot of these themes, Nikunj bhai, is playing out there, and I think energy transition is real. But let's not get carried away only by narratives. My only worry is that there are many companies where people are playing for energy transition in generation, transmission, but they don't generate cash flows, or are they trading at cyclically very high valuations. So finally the narrative will play out, but the price which you will pay could be very high. Don't forget, in the dot-com boom, Infosys did 255 crores of PAT. Over the next decade, it generated and ended up with 6,500 crores of PAT. So 255 crores to 6,500 crores of PAT moved in. but the stock still took more than a decade to cross the price which you paid in the dot-com boom. So yes, many companies will see higher profits, earnings, but be very careful at the price which you are paying to buy many of these companies in the sector, just based on narrative and themes. Obviously, narratives will play out, but if you pay a wrong price, you will probably suffer over longer periods of time.
Indeed. Pankaj, always great having you on the show. Thank you so much for your time today.
Thank you. Thank you, Aish.
Okay, let me just revisit.
If you like this video, then like, share and subscribe to ET Now.